Hi everyone, I'm Ken from CryptoTradingKS and the CTKS method. In yesterday's video, we went through sell-off fractals. I'd suggest if you're new to this, have a look at yesterday's video. It's really good. We can see that we've actually come up to this particular part. Does that mean that we could come down to around that 51,900 area in the next few days? The secret to trading and investing inside of crypto, in fact inside of any market, is to have a simultaneous three decision making process. Think about what would happen if price goes for you in your direction, if it goes against you, or if it goes nowhere, and hold these three simultaneous positions in your head. It doesn't sound that easy to do, but it's a lot easier when you get used to the idea that price is always moving up and down and up. There are a number of different fractals playing out at the current time, so we need to be aware that things can change. All you realistically need to do is to keep your eyes on structural levels. Just to understand that when price comes down, that's a fantastic opportunity to get in and do some buying on red and selling on green. And just a bit of housekeeping. Inside the service, I've released the video for this month. It goes through all of the different charts, all 32 of them. If we follow this particular sell-off, the P2, we could come down and see about 51,000 and before going up to around 64. If we follow the P1 fractal, we might see some downward price momentum before just scooting up and then moving in a wave. What's really important here is to understand the price doesn't just go in one direction. A lot of times you will be told that it can only go down or it can only go up. This is simply not the case. Inside a 24-hour period, you get all sorts of up and down movements. And one of the things that you will find when you get in on really negative price momentum, that is often the absolute best place to buy. Unfortunately, most people just get terrified of the market and run away. And they get attracted back into the market when prices go up just before they go down again. My focus is to help you to be more of a financial blessing to yourself and those you love, gaining real wealth and positive excellence in the process. The way to do this is to think differently about price. If you're always keeping a three-dimensional perspective on where price can go, always knowing that price can go up and down all the time in an uptrend or in a downtrend, it can go actually up and you can do really, really well from positive volatility in down waves. This is an absolute game changer because you can trade and also invest. Traders are fantastic at buying, but not so good when it comes to selling. Traders are exceptional on timing and selling. But if you combine both, wow, you've got a superpower. There were some absolutely fantastic comments in yesterday's videos. Very, very big thanks to everybody who watched. And just a question, where do you think we're going? Do you think we're going to come up to this 64 or do you think we'll head lower first? There is exceptional volatility inside the crypto market. That makes it really important to know where your structural levels are. So let's pop on the indicator. To understand price in this way is actually really straightforward. If price comes up through a structural level but doesn't confirm it as support, that means it doesn't make a higher high than what it did previously. It is coming back to the structural level of support below, and so forth, and so the game goes on. If it doesn't confirm, it's going down to the next one. You'll notice that there's different levels of structure and they're all different weights, which means they're actually different strengths. Everything is about confirmation. And you can see this 54,200 level has been a pretty important level for Bitcoin. Also, this structural level at 55,400. You can see we had a ton of trouble getting above it But when we finally did get above it and there was a final flush out of the leverage longs in this particular position, when we got through it, all the shorts were liquidated and we came up to higher structural levels. I mentioned this in a couple of videos, a couple of past videos, that the smart money would in fact more probabilistically liquidate all these shorts before stacking in the longs. And what that basically means is that the smart money is seeing that there's potentially negative momentum inside the markets, so they want to take as many shorts out as possible as they can. But everything is always structurally bound. You can see how this 57,400 level has prevented price from going further. Just keep your eyes on structure. It is an absolute game changer. Structural levels are far, far stronger than liquidation levels ever will be. Solana is a great favorite inside the community. When you look at price action, it can seem really random until you discover that it's all structurally bound. That's why, if you understand structure, it is a literal game changer. We can see that Solana's been playing inside structural levels. When it got above, it nearly got up to the next level of structural resistance at 132, but it was pushed back. And these structural levels held Solana incredibly well. We've seen Solana break through that 132, literally touch the 137 and make its way back. One of the things that you really want to make sure that you do, look at total crypto market cap and Bitcoin structural levels and compare it to the chart that you want to analyze. It's a very important process. And please let me know in the comments, what do you understand by the concept your chart is moved by other charts? Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.